This ETF gives you exposure to a trend with a lot of momentum. First off, read this disclaimer carefully. Okay, we will look at one of the sectors. We are in the industrials. Specifically, we are looking at smart grids. Good performance from 52-week low, and not that bad as far as the 52-week highs. Okay, so let's now explore this one a bit more in depth. So this is the first trust Nasdaq Clean Edge Smart Grid Infrastructure Index Fund. Very cumbersome and long name. Grid is the ticker. So basically it's a smart grid ETF. If we look at the seasonality, you can see that we're currently in a season that's quite mixed. You can see that October is quite strong. The problem is that September and November are a bit more mediocre, because this is the percentage of months in which grid closed higher than it opened. So let's explore this in a bit more detail to get to know the big picture. So these are weekly data points, all the data we have here for grid. And the first thing that really just jumps at me is that this one, so far, it's moved in some monster cycles. So let's actually measure these cycles as far as size goes. So here you see, these are very big cycles. Based on the cycle patterns, you could of course make the case that this is another huge rising cycle. But when you're dealing with very big cycles, you gotta also be a bit careful, because especially given that we had this major crash here due to the lockdowns that did actually disrupt a lot of cycles out there. But this is one of those things with these new coming industries that in the long term it is very easy to make a bullish case for smart grids. The problem is that there's a lot of uncertainties. There's all kinds of issues with costs when something is new, even though the entire purpose of the smart grid is to be more resource efficient. But that's always the tricky thing. It's the same thing with robotics and all of the other major futuristic trends, is that there's enormous uncertainty. But long term it is very bullish. But basically you need to expect some volatility if you get into these kinds of spaces. Given that this one moves in some pretty substantial cycles, also some small cycles throughout, given that we've had a very strong rising cycle now, this is one of those that if I were to enter a long position, I would want to do it after a more meaningful dip, simply because the dips have been rather significant in the past. So if you look here at the RSI, you can see here that oversold levels, or close to oversold levels, have been historically good entry opportunities. So if you do get a pullback, it's been reliable in the past. So as far as overbought levels, it has occasionally here functioned pretty well as places to go short, but not always. But there is some reliability here with the RSI, the Relative Strength Index. If we go here to the daily data points, and we can see it in a bit more detail. So you can see here that if you look at these cycles, like 1, 2, and this one, and this cycle, and this cycle, they seem to be of approximately similar size, which suggests that there could be more left in this declining phase, suggesting there could be a better entry opportunity on the horizon. Yeah. If you look at the statistical correlation with the S&P 500, it is 94% positive, so that's a rather strong correlation. They do move rather tightly together. Okay, let's look at Finvis here on grid. Get some performance. So it's 11% the year to date. That's pretty good. Over the last half year, it is up to 39%. If we go here to ETF database, the expense ratio is 0.70%. That is a bit more on the higher end of the spectrum, but that's basically because there's not a lot of competition. I think this basically is like the only pure smart grid ETF. Here we are looking at the valuation. The PE is 21.6. 10 is the solar energy ETF with a 40 PE, and LR, that's uranium and nuclear energy ETF. That one has a 16-ish PE. But these are a bit different. I would say that this ETF and this ETF are more in the energy space. This is more, this is industrials. This is infrastructure. It is in a separate category. Looking at the dividend, 0.8%. So yeah, not much as far as dividend goes. The solar energy ETF has much lower dividend actually. What is the ILCO? It is the Yieldco and Renewable Energy Income ETF. So that's one is interesting. With the 3% dividend. So let's look at the holdings. Let's actually look at the breakdown a bit. So industrials, the major part, then technology, consumer cyclicals, and utilities. The market cap, large caps are dominating, but that makes sense. There's a lot of there's a lot of very, very big companies in the industrial space sector. Looking at regions, Europe is quite big and North America. Here you can see the market tire. Country breakdown, yeah. If you look at companies here, you have Aptiv, you got Eaton, Schneider Electric. So I do like the companies they have here. These are companies that you could make a clear case that they have significant exposure to the smart grid revolution. Because that's something you always need to consider very carefully when looking at an ETF is, what is the actual composition? Because the problem with ETFs is that occasionally you will find a bunch of companies that are these conglomerates that have exposure to everything, which means that any ETF can have them as part of their top holdings. But the point of any kind of investment is to get exposure to a certain thesis, a certain theme. And that's something that I'm very big into, thematic portfolios, because one of the best things you can do in investing is to analyze data on a more qualitative level. What is the story? What is the narrative? And the narrative is quite clearly very bullish for smart grids. So long term, it's very hard to become bearish on smart grids. But that is long term. That's looking decades into the future. Even though the long term picture is very bullish, it makes a lot of sense to do some market timing as well. And that's something that can certainly be done with this ETF. Let's look a little bit at fund flows last 6 months. So let's look at the last year as well, 3 years. So basically there's been a nice flow of money into this ETF. And this is a trend that is going to just continue going forward, because there are these environmental and corporate governance criteria that funds have to, they are pushed to support, which means that there will be more and more money that will flow into this whole clean energy, renewables, smart grid, future society space, which of course is bullish for these kinds of ETFs. Whatever you do, of course, don't fight the trend, and may the trend be with you.